Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I offer in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good afternoon. Ira Epstein of Lynn & Associates with your weekend edition of your agriculture update for this Friday, the 19th of January, 2018. Now, the markets are still open, but not in the ag markets. They are in the other markets. We have just seen, and it's about 1:30 p.m. Central Standard Time, Chuck Schumer had left the president's office and headed back now, I guess, to the House and Senate, and they'll find out what's going to go on through all that. Who the heck knows what they're all really doing? In any case, when you look at it, the stock market likes the idea that there's a possibility of that. The metal markets had a fairly good day as well. In the ag markets, the corn was flat this week. Wheat's still a weaker of the markets, and the beans have had a nice rally off the lows. We saw that we got some short covering today in the sugar, and a market that hasn't given up any ground is the cotton. When we go to the monthly bar chart on soybeans, and this is obviously just gives you a picture of the big broad range because each of the bars that you see here represent a month of trading. And as you can see, the market has been going literally sideways in this 970 area for the longest period of time. When we go to a weekly area chart of closes, this was the monthly, remember, that's a different game. You've rallied back to the 18-week moving average of closes, and the market is sort of stuck right there. So we got over it, we got back under that number, and here you are just back in it. And when you put a moving average on a chart, often you can see things that you don't see the other way. We see that the market had a thrust to the downside last week that was met this week by coming back through a series of highs. And when I put the swing line on, you now have a pattern of a lower low and a higher high. So what is the market doing? Well, it's not trending. That's the first thing. When I put back on the 18-week moving average of closes in red, you can see that you're literally right there. You close 77.25, you're right over that. The next resistance is the 100-day average, which comes in at 989. And over that, you have Bollinger tops, which come in at 1006 and one on the bottom at 944. And what this market has really done is over the past 2 months, it has rallied back up to the upper band, tried the lower band, come back to a pretty neutral spot, and it's just sort of looking for what it's going to do in the springtime. I would imagine people are keeping a close eye on how the harvest, well, not harvest, how the crops are progressing. I used certainly the wrong word in South America, because where we're now at the middle of January to the latter part now, because we're at the 19th, just getting into that other section of it, this is a key time in the southern hemisphere, and we'll see how their crops are doing in time. The corn is obviously the first one that you look at, and then the beans follow right behind it. On the momentum of the market, the momentum is trying to turn up. That's clear on the slow stochastic. You can see how the red line is trying to get back over the longer-term blue line. The market is just stuck in sideways Bollinger Bands, but this action is what sets a trend up. Sideways action is where you come out and you make these big moves up or down. So keep in the back of your mind, this is a launching pad, and eventually the market comes out of that. In the meal market, we tried the downside last week, couldn't get anywhere, came through this week on the top side, went to the upper Bollinger Band and ran into problems. And again, just like the soybean market, look at how sideways the market is going when you look on a weekly basis. Momentum here too has turned to the upside. You are not trending. A trend would be defined as higher highs, higher lows. You don't have that on a weekly basis on the swing line. When we come to the soybean oil, you're even not trending. What oil did recently is it went to the lower Bollinger Band after it hit the upper bands right here, came back down, rallied to resistance at the 18-week moving average of closes, fell back a bit last week, and then this week continued to break to the lower band. So the momentum in that process is still pointing down. You're not trending, but the bias of the market is down, and you should keep your eye on whether or not the 18-week average in time gets under the 100-week. That would be a bearish crossover, and we haven't seen that in a very long time here. That would bode very, very poorly for the soybean oil. In the corn market, we've gone into sideways, just spinning action. You can see here the wider Bollinger Bands. Remember the theory of a Bollinger Band, and these are these black lines I'm showing on the charts, is that the market will trade within them 95% of the time. To create a trend, you often, the word isn't always, but very often, spin sideways within the bands. They narrow up because volatility dies off, and then the market starts breaking out of them one way or the other. At this point, there's double resistance in the corn at the 356 and 3/4 level, and then again at the 358.5 level, the 100-day average. Resistance doesn't mean you can't break out. What this market has done a good job of is that it set itself up with higher lows, higher highs. That's bullish. Prices are over the 18-week average of closes. That is bullish. And momentum is up. All three parts on the longer-term chart are friendly, calling for the market to maybe be able to get up another 6 cents. You'll say that isn't a lot, but in a market like this, that's all you look for. In the wheat market, we had a failure on the rally that occurred over the past 2 weeks. The market was able, and I'll take you back here. You had a pattern of higher lows, higher highs ending on January 5th, where the market got up to the 100-day average and it had closed over the 18-week moving average of closes. What you didn't want to see is prices back under 420 and 3/4. What the market did right here is it got to 418 and 3/4, which negated the uptrend. Now, what was the potential of an upside, you have two resistance points, 428.25, 434.25, and as you can see, the market tried the downside, and it's come back up challenging at one time this week, the 18-week average, but you out of a trend again. Momentum, flattening out with a slight bias. The bias of the market is down since you're under the 18-week average of closes, and you are certainly not trending in this market. In the cocoa market, been reading a lot of reports from different firms, including our own when they do price counts, that they think the cocoa market has put in a very important near-term low. Where they're coming off that idea is this low to that high coming back down and thrusting forward. My problem isn't if they're right or wrong. My problem is that all that the market really did on a longer-term basis, on the weekly chart, is get back up to the 18-week moving average of closes, and it ran into a brick wall, and it is back down almost 80 points from that number. That's a big move. Momentum-wise, the market is oversold but not trying to really lift itself up. In the sugar market, the sugar had an interesting week, and it got beaten up real bad. A word is Brazil is lifting tariffs on the sugar so that they're lifting the tariffs on imports of ethanol, which impacts the sugar they were converting to ethanol, because if they're lifting the import duty, and it was 20%, well, what happens is you can take in more, and more sugar then goes where? Back in the sweeteners, and that's what's happened here. Is this cheap enough now down to the lower Bollinger Band where we have found support in past times to say that, okay, the market worked its way down, but it's really not falling apart? Don't know. I will call the momentum down. The bias is down as well if you look at under the 18-day average momentum, and the trend is trying to turn itself down too. In the coffee market, this has been a market that has whipped a lot of different soft traders. And why do I say that? Because you had one break to the lower band, you came back up for 3 weeks up, and all of a sudden you're falling apart again. Momentum has turned down in this market. You are not trending. You have to take out this week's high and close back over the 18-week average to say, now I have higher lows. I've already got the higher highs. That would be bullish. Is there anything here that can turn it into lower highs, lower lows? Not on the current pattern as I see it. Cotton's been a son of a gun. If you've been watching me on the daily charts, I've been saying this is one of the strongest markets. It's refusing every time it loses what we call when the slow stochastic indicator embeds or locks into a trend, and it loses that, it breaks very little. Normally you go back to the 18-day average of closes. Do your own daily charts, you'll see what I'm talking about. Not that market. And you're seeing it right here. This market continues to get just enough under a Bollinger Band, then back over it. I don't care if you got 2 weeks in a row of over it. It's not excessive yet. Cattle market. On the longer term chart, I'm talking the weekly, if this market can take out 116.25 and just close the week lower, it might turn itself into a trend to the downside. Right now, if you're a bull, you're an aggressive buyer, I'm thinking, right here in the 117.30s to 20s. Why? Longer term, you've got the higher lows, higher highs. Momentum has flattened out, but the trend of the market is still up. The hog market's still in an uptrend, higher lows, higher highs. Yes, each time it hits that upper Bollinger Band, it backs off, but momentum is still locked in and looking very friendly to the upside, as is bias. So you put it all together and you got a pretty good story there. Obviously, the stock market, as I'm finishing this up, likes what it is seeing or hearing that maybe something in the funding package can get done. These are some of the categories that our firm writes on. Now, here we go. You're going to be watching me either on a Friday, Saturday, or Sunday for the weekend edition, right? I doubt that your firm's going to send out a lot of this technical information or fundamental information. We do. Whether, if you're a grain trader, you're always looking over the weekend, how's Monday going to shape up, what's Sunday night going to be? We're doing it. We've got our own on-staff meteorologist. We've got all of our writers on it. If you're a grain trader, option strategies, who's doing what the commercials are doing. Remember, we do a lot of consultant work for a lot of firms in the agriculture business. So that's the roots of the Linen Associates. So if you'd like to see what they write to their clients, some of it, we'd like to give it to you if you haven't seen it before. That way you know what our clients are getting. And let's face it, in this day and age, yeah, commissions are great, but you got to be right the market. The pits don't exist anymore. You're not calling down, what does the guy see, blah, blah, blah. It doesn't work that way. Now you've got different types of information. We offer it. Call us. Over the weekend, you can also go to our website, sign up for our Lin Research. You'll see it on the front page. We got a whole carousel of events that go by, sliders. You can click up here if you're watching me on YouTube, or underneath us on many websites it says, click here for Ira's free information. I'm Ira Epstein. You have a great day, and I will talk to you all come Monday.